Good afternoon, everyone. I'm Dan Hussey with Zener Ag Hedge. Today, joining us for our World Agricultural Supply and Demand estimates for July 12th, 2021. There we go. Remember, trading futures involves risk and is not suitable for all investors. Everything we talk about here today are just our own opinions and not direct trade recommendations. Joining us today, we have
Hi, my name is Ted Seifert. I run Zener Ag Hedge. Joe Recruito.
And Alex Keurig.
And again, I'm Dan Hussey. We are market strategists here with Zener. We were founded in 1980 as a firm. We're CFTC registered NFA members, and we're proud to be the brokers bringing you today's update on the WASDE report. Some of the services we offer are for global futures expertise are for brokerage and clearing of all futures and commodities based out of the U.S. and abroad. We provide accurate risk management strategies and techniques for commodity hedging across the board. So today we are here to talk about the yield and production estimates from our WASDE report and what the USDA has had to say. So for corn yield, USDA coming out with a 15 billion bushel production number and a yield number that was completely unchanged from our June report. Analyst expectations were for a slight yield reduction that would have kept the balance sheet somewhat status quo or unchanged, given that acreage was raised somewhat higher there in our June acreage report. Ted, you had noted that there were a few places on the balance sheet that noted the change in our ending stocks number where there was an adjustment from our June report that obviously wasn't reflected in yield here.
Yeah, so yield and production is generally not addressed on the July WASDE report. Obviously, we had new acreage numbers that we were plugging in for our planted acreage numbers, and the USDA carried over that 179.5 national average yield. Again, they do not usually change that national average yield on a July report unless they see extenuating circumstances. And some of us thought that they might lower yield by just a little bit for corn because of where a lot of those added acres were up in the Dakotas and Minnesota, areas that have been struggling with drought-like conditions. But the USDA did not see fit to do that. So they left yield unchanged, as they normally would do on this report. And that just plugging in the new acreage numbers, that's where you get the increase in production. We don't have the demand side up here, but what that equates to being is 175 million bushel increase in production. Now the USDA offset some of that by lower beginning stocks. Old crop carryover declined by 25 million bushels. They also increased new crop exports by 50 million and feed and residual by 25 million. So 100 of that 175 million bushel increase in production was offset, and that left us with a 75 million bushel increase in ending stocks. That was pretty close to what the trade was looking for, maybe about 25 million bushels more, but I think the trade by and large is expecting that yield number to come down, even if it's slightly. And I think the trade for the most part is saying, well, unless there's something crazy on the demand side of things that we're not seeing right now, and that for some reason that demand isn't there, this might be the largest carryover number we see for new crop corn.
And I think the assumption could be made that these are probably the highest yield estimates we might see on the year as well.
I mean, I feel pretty confident that's what the trade feels right now. I don't know. I'm not saying that a 179.5 is unattainable. It'd be a new record by about 3 bushels an acre. I think we've got a lot of good out there, and I don't know if the bad is quite as bad as people would expect given the conditions that we've had. I think we have a good crop. I think it'll be at least in the top 3 yields that we've ever seen. Whether it's a record or not, we'll see. And if it is a record, is it by 3 bushel an acre? I don't know. I'm currently at 178.
Gotcha. And that, of course, takes us into, like we had been saying all day, was that now that this report is out of the way, we're back into weather conditions and weather markets. And that seems to be the driving force that will be taking markets into the end of the week's trade. Now, not being in weather markets brings us to the soybeans trade, where we saw a yield number that was left unchanged again. Analyst expectations was for a minor adjustment in yield. They're almost almost non-important on this report. The July actual production number coming in at 4.4 billion bushels, right in line with the June estimates, but still, again, a little bit above that analyst expectation number. Generally speaking, was not a soybean report. Nothing was really expected here in terms of big changes on soybeans. And we don't find ourselves quite yet into the weather conditions and the weather markets for the trade here. Ted, is there anything of note that you saw on the soybean demand side that could have changed some of your opinions?
Nothing happened on the soybean report. They didn't change really anything. There were some small accounting things for old crop soybeans, but that left us with an unchanged carryover, unchanged beginning stocks for new crop. They didn't change anything on the domestic new crop balance sheet. This was a non-event for soybeans. I will say the world numbers were slightly bearish for soybeans, in particular lowering Chinese demand by 2 million metric tons. That might be something that we look back on, but at least for today, it was really nothing.
And jumping, right into those world ending stocks, you mentioned the 2 million demand reduction for China. That's where the 2 million additional metric tons here are coming from on the world ending stocks number, correct?
Yeah, pretty much.
Yeah. So to give everybody an update here, we saw a reduction in the world ending stocks on corn by 10 million metric tons against their June, and definitely better than trade expectations. Can understand why we're expecting maybe tighter carryouts here in terms of the global balance sheet for corn. And then wheat with a small reduction in their ending stocks number as well. And wheat today certainly seemed to have been one of the driving forces in our in our markets. In our market. Yeah, ending stocks of 291. Yeah, so we have do apologize here. It's not 279 here. Corn ending stocks. It's a 291 ending stock number. So we had a 2 million metric ton gain there. For the corn number. Needless to say, our old crop numbers here, segueing into the balance sheet adjustments for our WASDE report on our domestic balance sheets. Was not expecting much of a change there against analysts, the trade, for corn, and came in right in line with analyst expectations, and again, soybeans, no real adjustment there on old crop ending stocks. And here's, Ted, you commented a few things that were moved around on the balance sheets. Where were the adjustments for old crop made?
All right, so, soybeans, they lowered imports, they lowered crush, they lowered exports. It was all wash. So we ended up at 135 million bushel in soybeans. For corn, because quarterly grain stocks had come in lower than expected, they had to do something there. So they lowered 25 million bushel to 1.082. I got to say, though, after seeing export inspections again today and sort of a lack of any new export sales, I kind of feel like their old crop export number might be, and I've been saying this for a while now, but I'm a little worried about that old crop export number. I don't think we're going to quite hit it. So I wouldn't be surprised if that 1.082 billion bushel carryover for old crop corn ends up being a little bit higher, somewhere just shy of a 1.2 billion bushel carryover. That's just my opinion. I would hope, though, that those exports would carry over into next year, but I don't know. I'm a little bit skeptical about that 1.082 billion for corn.
Yeah, and of course, adjusting it now leaves us just with more questions than answers. So, speaking of new crop ending stocks and carrying that over into this next year, July ending stocks coming in for corn, 1.4 billion bushels, a little bit heavier than analyst expectations and heavier than the June report. Soybeans coming in rather unchanged yet again. And wheat ending stocks, of course, dropping there. And wheat might have been the biggest mover of the report, and we'll look at the wheat numbers here in a minute. But again, wash on the soybeans there. New crop corn, you already commented earlier, Ted, on where some of those changes were made. Bringing us to that wheat production, the spring wheat, and certainly the loss here of production of all wheat across the board was categorically driving force earlier in the day, and certainly caused wheat to lead the way, being up 20 cents shortly thereafter the report came out. Ted, was there any striking news here? I know we were talking about spring wheat conditions and earlier today as well. Is there anything there on the wheat prospects that was catching your eye?
Yeah, absolutely. I mean, that was the surprise of the report. Wheat ending stocks came in well below trade expectations. That is because they cut the spring wheat crop more than what the trade was expecting them to do on this report, with that last part of that statement being sort of the key there. I think a lot of us would agree with that 345 million bushel production number, down from almost 560 from last year. So I mean, it's a very significant reduction. But we just weren't sure that USDA was going to do that all right away on this report. We kind of thought it might be a scale-in thing, and maybe it is. Maybe that 345 is not the bottom either. Maybe that number keeps coming down. Either way, they really ripped the Band-Aid off here on this report. That meant that spring wheat production was about 100 million bushels below what our average expectations were. And again, we saw our overall wheat carryover come in well below expectations too. It really highlights the problems that we're having with the spring wheat crop. And at the end of the day, we're looking at one of the tighter wheat carryovers we've seen domestically in quite some time. So this was a fairly friendly report for wheat, and Minneapolis spring wheat up almost 45 cents today.
Yeah, definitely reflected on the charts. And with all that being said, kind of takes us into, we'll have to segue in a little laterally here into South American production. Numbers are what they are, right? Pretty much in line with analyst expectations in terms of the direction that they took the soybean number. The corn number obviously a little bit higher there for Argentinian production, while their soybean number was a little bit lower. Brazil's production was for soybeans was slightly higher at just 250,000 metric tons higher there, and of course the corn production in compared to the June for Brazil, a big cut of over 5.5 million there. But generally, the trade did pretty well at guessing where that was going to be coming in. So, with all that being said, was there anything else in the South American production that is worth noting? I know Brazilian's corn production was the biggest slash there, and certainly now everything has come to be with their weather forecast.
That's Brazilian corn production number, now that it is in the low 90s. Some people think it can get into the 80s. I don't really see that. In fact, I almost think 93 might be a little bit too light, but whatever. Look, that's what's going to keep our corn export demand hopefully strong through the next Brazilian harvest. So pretty much for the next year into July of 22. That's the hope anyway. So this is, while it's not a big shocker on this report today, it didn't really move the markets today because it's been widely talked about. That is the underlying sort of bullish factor that we have for corn demand going forward. That, and we're out driving again. Ethanol looks really good. So demand can be a very fragile thing up at quote unquote higher prices. But we've got underlying issues with that Brazilian corn crop, and again, recovery in driving and gasoline and ethanol demand. That will hopefully mean that demand is there, and again, if we start taking away yield and start taking away supply, that could mean a rather tight balance sheet going forward. So that's what the market has to pay attention to and sort of be aware of.
And that balance sheet isn't just tightening on the international level, we're watching it tightening on the domestic level as well. So we'll see if we end up having to price ration some of that demand into this late summer, early fall. With all that being said, weather will continue to play a part in the markets. We're obviously through our July WASDE report. We have our conditions and crop progress report coming out today at 4 p.m. Central, 3 p.m. Eastern here shortly. Other way around, 3 p.m. Central, 4 p.m. Eastern. And outside of that weekly report, our weekly export numbers And of course, we haven't seen a flash sale in a little bit here out of the east, or out of China in a while. So we'd like to see something of Chinese demand begin to pick up here. New USDA reports coming out, in a month. The August report should be our next clue into where the USDA will peg the yield.
That'll be a big deal.
Yeah, really big deal. Now that we've seen them again punt the July report away, which is to be somewhat expected, and the trade certainly was expecting. Certainly legislation, and if we could have gotten into an ethanol tangent there at the EdTed, we'll be watching to see if the RIN battle continues. And now that South American production is starting to come under wraps, we're starting to hone in on that number as well. So we here at Zaner, we pride ourselves on being able to offer everyone a independent and a custom tailored approach